What's good, Courtside family? Your host, Obi here, Tuesday, December 2nd, 2025. Yesterday, I talked about William Lee saying no plan B for Q4 profitability, and some of you caught that I filmed it before November deliveries actually dropped, so smart catch, but the numbers just came out yesterday afternoon, and now we can do the actual math on whether NIO can hit that Q4 profitability target or not. NIO delivered 36,275 vehicles in November, the second highest month ever, but down 10% from October's record of 40,397. So here's what we're doing today. We're breaking down the November numbers, we're doing the Q4 math, and we're looking at where NIO stands versus the competition with just 29 days left in 2025. Because the race to year end is on and it's getting messy. This is Courtside Financial. Let's run the numbers. All right, let's start with what NIO actually delivered in November. Total 36,275 vehicles. Year over year up 76.31%. Month over month down 10.2%. That's NIO's second highest month ever, only behind October's 40,397. So on its face, this is solid, but let's break it down by brand because that's where the story gets interesting. NIO's main brand delivered 18,393 vehicles. Year over year up 18.72%. Month over month up 7.29%. The main NIO brand grew month over month. That's huge. William Lee said the ES8 demand is strong and the numbers back it up. 4 consecutive months of growth for the main brand. Onvo 11,794 vehicles. Year over year up 132.07%. Month over month down 31.99%. So ouch guys, Onvo got hit hard, down 32% from October's 17,343. This is the subsidies cliff. Lee literally said that all models except the ES8, Firefly, and the ET9 were affected. Onvo L60 took the hit, Firefly 6,088 vehicles. Year over year, not applicable because Firefly launched this year. Month over month, up 2.98%. Firefly set another record. That's now 3 consecutive months of records for Firefly. And remember, Firefly is just getting started internationally. So here's what I'm seeing. Here's the pattern. Premium main brand, I'm referring to the ES8 specifically, is growing. Mass market, Onvo, they hit the subsidy cliff, and the compact, which is Firefly, is on a steady climb. This literally tells you the trade-in subsidy ending hurt the middle 200,000 to 300,000 rent segment where Onvo plays, but premium buyers, the ES8 and entry buyers, Firefly, are less likely to be sensitive to that policy. So the Q4 math, can they hit the target? Let's do the math everyone's been waiting for. NIO's Q4 guidance is 120,000 to 125,000 vehicles. What they've delivered so far is for October 40,397 vehicles, November 36,275, and total 76,672. So what they actually need in December, on the low end 120K, 43,328 vehicles, high end 125,000, which is 48,328. So December needs to deliver 43K to 48K vehicles, and here's the question, is that actually realistic? Arguments for hitting the target. ES8 is ramping, main brand grew 7.29% month over month. If that momentum continues, December could be strong. There's a year-end push. Everyone in China is trying to close deals before the purchase tax change, and NIO will throw everything at December. There's also a historical precedent. December is typically a strong month. Last year, NIO delivered 50,045 vehicles in December 2024, their record at that time. Now here are the arguments against it. Onvo is down 32%. That's a big hole to fill. Can the ES8 and Firefly compensate? Well, industry-wide, there's a slowdown. The subsidy cliff hit everyone, and new orders are down across the board. The comp December 2024 was 50,045. To hit 48,000 this year, they need to basically match last year despite the weaker Onvo brand. My take is that they'll hit somewhere in between the 41,000 to 45,000 range in December. That puts Q4 deliveries at 117,000 to 121,000 total, just shy of guidance or barely meeting the low end. And is that enough for profitability? Well, we'll find out in late January when Q4 earnings drop, but of course it's tight. So let's zoom out and look at where NIO stands versus everyone else, because the year-end race in China is wild. Leap Motor delivered 70,327 vehicles in November, and obviously they're going to deliver more because low end, but they already hit their 500K annual target in November, 45 days early. So they're the clear winner of 2025, targeting 1 million in 2026 as far as delivery. Leap Motor lapped the field. They're not competing with NIO anymore. They're in a completely different league, but again, they're selling cheaper vehicles. XPeng did 36,728 vehicles in November. XPeng hit their annual target 350K back in October. They're up 19% year over year, but down 12.6% month over month. So they're clearly just coasting to the finish line. XPeng finished the race. Now they're just building momentum into 2026. Let's talk about Li Auto. 33,181 vehicles delivered in November, down 31.9% year over year. Dead last among the big EV startups. Only 56.5% of their revised 640K target was achieved, and they're gonna miss pretty badly, obviously. Li Auto is in a free fall. The former king is getting dethroned in real time. NIO, 36,275 vehicles in November. For comparison, 277,893 year to date, 63.15% of the 440,000 target. They'll likely finish around 320 to 325K this year, missing the annual target, but still growing by 45% year over year. And we can also talk about Huawei, over 80K in November, 513,000 year to date, and they targeted 1 million. They'll finish around 600K. They're dominant, but like a lot of other companies, clearly they overpromised. Xiaomi, over 40K delivered in November. Xiaomi's been crushing it this year. They exceeded 500K cumulative deliveries. They hit their annual target ahead of schedule, and they're having this kind of rookie sensation this year. Here's the hierarchy as we close out 2025. Tier 1 are the volume kings, Leap Motor 500K, Huawei 600K. Tier 2 is the solid performers, XPeng and NIO. They're 390K, 320K, Li Auto 360K. Tier 3 is the promising, that's Xiaomi at 500K cumulative deliveries, their second year. Tier 4 is the second gen struggling, that's GAC, that's Zeekr, Deep Blue, Voya, Avita, all missing targets by 30 to 40%. So the reshuffling is real. Wei Xiao Li, which means NIO, XPeng, Li Auto, is becoming Xiao Wei Li, XPeng, NIO, Li Auto. The pecking order is clearly changing in front of our faces. So what does this mean for NIO's profitability play? Let's bring this back to the core question. Can NIO hit Q4 profitability? Here's what we know now that we have the November numbers. Revenue projection. If NIO delivers 117,000 to 121,000 in Q4, my estimate, average selling price is around 280,000 Ren, mix of ES8, Onvo, Firefly, that's roughly 32.76 to 33.88 billion Ren in revenue, right in line with their guidance of 32 to 34 billion Ren. For gross margin, management guided about an 18% vehicle margin for Q4. ES8 is at 20% plus. Onvo's improving, Firefly's ramping. So if they hit 15 to 16% gross margin at company level, that's 4.9 to 5.4 billion Ren in gross profit. Operating expenses, R&D is 2 billion Ren, SG&A about 4.2 billion Ren based on Q3, and total OPEX about 6.2 billion Ren. The math, 4.9 to 5.4 billion Ren gross profit minus the 6.2 billion Ren in OPEX equals negative 1.3 billion to negative 800 million Ren in operating expenses. So the math is pegging it out so that they miss, but not by a lot. And they're gonna miss unless the ES8 over delivers and they hit 25,000 plus ES8s in Q4 at 20% plus margin. SG&A comes in lower due to no major marketing, as management said. Other income, which means swapping, network revenue, chip sales, etc., contributes more than expected to their revenue and margin. So if those three things happen, they could squeak into slightly positive or break even territory. So my prediction is that non-GAAP adjusted net loss of 200,000 to 500 million ren is what we're going to see. And that's close, but not quite profitable. That's basically break even in spirit, but technically a miss on the quote unquote no plan B commitment that we talked about yesterday, that the CEO said that there is no plan B for not having profitability. The bigger picture is that NIO's focused on quality over volume. Here's what I think matters more than hitting Q4 profitability by 100 million rand. NIO's executing on the fundamentals. Gross margin is improving 13.9% in Q3, targeting 18% vehicle margin in Q4. OPEX controlled, R&D stable, SG&A is flat, cash flow positive in Q3. ES8 demand is strong, main brand up 4 months straight. Firefly ramping 3 consecutive record months for this small company. International expansion accelerating, 17 new markets coming, and the delivery number is what it is, 36,275, and November is solid despite the subsidy cliff. But the real story is NIO is building a sustainable business model focused on profitability, not just volume. William Lee said it, we're no longer solely pursuing sales volume, but focusing on operational quality. Leap Motor can have their 70,000 monthly deliveries. XPeng can coast. Li Auto can struggle, but NIO is playing an entirely different game now. They're aiming for full year 2026 profitability with 20% gross margins. That's the prize. Q4 2025 profitability would be nice, but to me, it's not really going to be one of those things that's make it or break it. So what to watch with 29 days left as we head into the final month of 2025? Here's what I'm watching. Number one is December delivery numbers, which will be announced January 1st, 2026. Does NIO hit 43 to 48K, or do they fall short at 40 to 42K? That determines whether they'll meet Q4 guidance. 2 is the ES8 specifically. Management said the ES8 will hit 40K for the full year, with most of it in Q4. If the ES8 delivers 25K plus in Q4, that's massive margin contribution. 3 is the Onvo recovery. Can Onvo bounce back in December, or is this a subsidy cliff that's really just going to impact them until year end? 4 is competitor struggles. Li Auto's collapsing. GAC is down. Second generation manufacturers are missing targets by 30 to 40%. If everyone struggles in December, NIO's performance looks relatively strong even if they miss slightly. 5 is 2026 guidance. When Q4 earnings drop in late January, management will guide for 2026. That's the real story. Full year profitability, 20% margins, and product launches. All right, family, that's it for the November breakdown. 36,275 deliveries. Solid, not spectacular. Main brand up, Onvo down, Firefly climbing. Q4 profitability is still in play, but tight. My bet they get very close but fall just short. But here's the thing, whether they hit Q4 profit by 200 million ren doesn't change the trajectory. The fundamentals are solid, the strategy is sound, and 2026 is when it all comes together. 29 days left in 2025. Let's see how NIO closes. This is Obi. This is Courtside Financial. Stay objective, stay focused, and remember, it's a marathon, not a sprint. Peace.